G'day guys, welcome back to this month's market update where myself and Crystal are going to break down what's been happening over the last month around Australia when it comes to property prices. And now I'd love to dive straight into some of the information coming out from SQM. A lot of talk at the moment is surrounding listings being really low and it being really tough to find some supply. But it looks like some things are changing at the moment. So total listings are down by 0.9% month on month at the moment. So that's not ideal, but most of the properties that were bought were the older listings because the new listings were actually up 2.7% nationally over the month of October, but old listings were down 5.8%. So things starting to look good. What we've found is that, Sydney and Melbourne listings are really starting to pick back up again, at least new listings, which is really good to see. Not yet really translating over to Queensland, Brisbane, WA, Perth, or Adelaide at the moment. Now, this is a new piece of information. Distressed listings are up 5.2%, mainly driven by the ACT and New South Wales. ACT distressed listings are up 35%.
Wow.
Month on month, which is massive. New South Wales up 8.9%, Victoria up 4.1%, Queensland up 3.6%, and WA up 7.6%. So what this means is, people are feeling the pinch. And this is inevitable, right? We've seen a 425 basis point increase in the cash rate over the last, say, 15, 16 months. What's actually happened is people's borrowing capacity has come down by about 30%. So you can understand that some people are going to start to feel the pinch. And this is just going to lead to a little bit of an uptick in listings as well. Even though those numbers are starting to come through, the asking prices are still up by about 1.2%, and asking prices are now at a record high of $805,000 Australia-wide.
Wow.
So they do expect the level of capital growth to continue, and we will see prices continue to increase, but potentially at a slower rate with more listings coming to the market and a few more distressed listings coming onto the market as well. So nothing out of the ordinary there.
Now to dive into some data from CoreLogic, we love to see their monthly update. The October National Home Value Index was up 0.9%, the combined national average, which is great to see. January to October, so year to date, we're seeing the national average is up by 7.6%, according to CoreLogic. Diving now into the major capital cities around Australia, Sydney was up 0.8% in October, Melbourne was up 0.5%, Brisbane up 1.4% in October, and Perth up 1.6% in October. When we look at the year-on-year average of price growth, according to CoreLogic, we've got Sydney up 9% since this time last year. Melbourne's up 2.4%. Brisbane is 7.8%, and Perth is leading the way at 10.8% in the year-on-year values, according to CoreLogic.
So the markets appear to be full steam ahead at the moment. It's looking like Sydney, Brisbane, Perth, potentially even Adelaide are going to see a double-digit growth year, which in my opinion is a boom year. And to go into talk a little bit more about the information coming out of the Commonwealth Bank of Australia, the major catalyst for this capital growth right now, even though we've got some challenging interest rates and economic conditions at the moment, we've got the strongest population growth that we've seen in over 50 years. So the only time where Australia saw more people move to the country was back in the 1970s. And this was the post-war immigration and the baby boom. And it was the only time where Australia has seen population growth stronger than right now. Even if you think back to the mining boom of 2008, significantly higher than that at the moment as well. The sentiment was sitting at about 82%, which is extremely low. It's actually consistent with a major economic instability. And this has been mainly driven by the media. It is quite fearful at the moment out there at the moment, but it's just quite polarizing because it's like you look into the data and things are good. We've got great population growth. Capital city property prices are increasing. You've got good job opportunity at the moment. In fact, one of the things that I was reading is from PSE is that Australia's employment participation rate is at an all-time new high at the moment as well. So people have got jobs, people are working, people are earning good money. It's just the media is making things look really, really rough. On top of the, obviously, property prices rising, the international immigration is really affecting the vacancy rates. So vacancy rates dropped back down to 0.9% in October, Just to put that into perspective, a balanced rental market is 3%.
Yeah.
So we're 2% below what is considered to be a normal balanced market at the moment, which is why you're going to see rents continue to rise. And over the last 12 months, advertised rents are up 10%. This isn't likely to slow down because we don't have much construction activity occurring at the moment. There's no new developments coming to the market. There's not much new supply coming to the market. There's something like 140,000 less properties being built than we need to sustain this population growth.
According to PSE, Phil Anderson's company, US stocks are on course to hit an all-time new high. Bank profits everywhere are up all over the world, and insurance company earnings are also up. So the big companies, the market leaders are all out there making huge profits right now, and that's going to continue to help the economic growth. We're definitely getting a sense that like international stability is quite strong. According to CBA, international investors are back in the Australian market and are currently making up 10% of home purchases in Australia. Just in terms of on the ground right now, we're definitely seeing that the inquiry we're getting through our business, the types of people we're seeing in competition at open homes and things like that, we are beginning to see a lot of that international activity pick up.
It's so crazy as well because like I talk to a lot of these international investors and you know, we're talking about their situation and how they're planning to buy the property because Australian banks don't make it easy for international investors to get into the market. But most of them don't worry about it because most of them are coming in with like huge amounts of cash, which, you know, it's a good thing because we'll see the market continue to improve, but it's a hard thing because it makes it difficult for, you know, first home buyers and Australians to get into the market because, you know, we're flat stick at the moment trying to save a 10 or 20% deposit for a home purchase. And then you get these international investors coming in with 30 to 50% deposits just to get into the property market. And, you know, if I'm a seller and somebody's coming in with so much cash, gives you a lot more security. And that's what we're noticing with the business and the negotiations at the moment. You know, we're trying to put our best foot forward, but, you know, with the higher interest rates, you've got to generally put a finance clause into the contract to give yourself a little bit of time to make sure that you can actually purchase the property. But you're competing against these other buyers that are just putting down cash, and it's really, really difficult to compete with them unless you're willing to push those purchase prices a bit higher, which means paying above market value, which doesn't feel any good. So it's a tough one. Hey, it's like the duality of life. You know, you've got strong capital gains and market improvements, but like the people that aren't yet in the market are going to find it harder and harder and harder as time goes by.
Yeah, and it's even just getting harder. Like the CBA put out, the RBA's monetary policy has decreased the average person's borrowing by 30%. So that means the average person who could have borrowed, say, $800,000 12 months ago can now only borrow $560,000.
Yeah, that's crazy.
So you're competing with these international investors that are making up 10% of the market who have cash to burn. The RBA has made it harder for us to borrow. APRA is still really, really strong with the contingencies around borrowing. Those first home buyers are just really struggling to get into the market. And it means that entry level point in the market, anywhere that's affordable, is extremely competitive right now. Like we're seeing properties sell in that 5 to 600K range, well above asking price with multiple offers. There was an example recently in South Brisbane where there was 150 registered bidders, 160 registered bidders for an auction. They were calling it an auction festival. There was like 500 people at this property.
I feel so sorry for Corey, the sales agent of that one. He's such a legend, and you know, he does great work, but imagine having to sift through 161 different offers. It would have felt like a ball. You know, when you go to a live auction at like a charity event or something, and there's like 1,000 people bidding. It's like, that's just wild. And, you know, we're seeing it every single day, especially at that lower price point at the moment. So it's forcing people to make some sacrifices to, you know, instead of buying a house, maybe they have to go for a townhouse, or instead of buying in a capital city, maybe they have to buy in a regional market. And, you know, according to Phil, this is just generally what happens at this stage of the cycle. And this is why you're going to start to see townhouses experience more capital growth. And you'll see regional markets around Australia start to experience more capital growth because people still want to get into the market unless you want to just get left behind.
Yeah.
So, you know, unfortunately, it's a stage of the cycle where you do have to make some contingencies and sacrifices to get in. But just make sure that you're talking to your team of advisors. Make sure that you're getting the right advice from your mortgage brokers, from your accountants about your financial situation to see whether or not it's the right time for you to get into the market. According to Phil, there's still a lot of opportunity over the next few years. He doesn't even believe that the boom has begun yet. So he's very bullish of the cycle, expecting to peak in sort of 2026 in the United States, and Australia's generally about 6 to 12 months historically behind that. And he feels as though the frenzy is really going to begin towards the end of next year. And that seems to be in alignment with the RBA and all the big four banks indicating that we should be now at the peak interest rate of 4.35% for peak cash rate, and that should start to decline towards the middle to back end of next year. All four banks believe, or not all four banks, I think it was Westpac and CBA, believe that the cash rate should be sitting at around 2.85 by the middle of 2025. So we know that those reductions in the cash rate have a significant influence on property prices. So whilst it still can be hard to get into the market at the moment with the higher property prices and the bigger deposits that are required and the higher incomes to sustain the serviceability, there's still great opportunity if you know where to find it.
Awesome. So that's a wrap on our November market update. We'll see you next month with some new information coming out from people like SQM, CoreLogic, PSE and CBA, and hopefully things continue on a positive trend.
Now, if you're seriously considering purchasing an investment property in the next 3 to 6 months, then we would love to offer you a free strategy session. During this strategy session, we'll talk about exactly where you're at right now, where you're looking to be in the future. We'll deeply educate you on the current market conditions and point you in the right direction as to where you should be focusing your time and energy for that next investment property. So head over to our website, www.pumpedonproperty.com. Follow the free strategy session links to book in a call with me.
Woo! That's a wrap.
That's a wrap.
Getting
Have a
cool,
spin.
bro. Yeah. Oh, sweaty. So sweaty. Oh, that's good. Look at that.
So nice, eh?
Oh.